And we are live. How's it going, everyone? Today we have a very special guest bringing crypto asset management to the masses via structured products. The project I'm referring to is Friktion Labs, and it consists of an automated portfolio management, which is managed via what the team has coined as volts. So, excuse me, there's a lot going on here with this project, but luckily we have Uddhav, co-founder of Friktion Finance, joining us today. We
Hey
also
guys.
have Alex, who just popped in, so I'm going to bring in Alex as well, who's also a co-founder of Friktion. How's it going, Alex?
Good, man. How about you?
It's great to have you guys in here. And I think what's really notable about you guys is your past experience. Uddhav was previously overseeing a couple trading desks as a subsurface engineer by degree. I also like that you guys noted that he has the highest degen score. I think that's pretty notable. And then jumping over to Alex, I know you have a wealth of experience in quantitative trading, which really interests me in general. And I think a lot of people aren't 100% sure what these sort of things consist of, but it looks like a lot of this is what you guys are looking to build and decentralize at Friktion Labs. So to really just start off, before we get into anything else, do you guys just want to outline what Friktion is and what your goals are behind building it?
Yeah, for sure. So we think about Friktion as a portfolio and risk management solution for anyone in DeFi. The reason we started building it was just lacked a lot of ways to think about risk the same way we would sitting on a trading desk. And we wanted to give that chance to everyone who is participating in DeFi, so we can kind of earn yields that aren't inflation based, and then we can also participate in products that potentially have long-term sources of yield. So
yeah, that's awesome. And most notably, I'm curious, what role does your guys' previous experience in creating some of these structured products? I know a lot of people get into options. Covered calls is one of the big things you guys are doing. Also, some other structured products. What does your previous experience really bring to the table here?
Yeah, I think our previous experience is pretty important because these products get a little bit complex, and like you need like a pretty strong background to be able to like price them, understand like what makes sense and what doesn't, and it's really easy to get lost in the trap of like creating more and more complex products until something doesn't make sense. So I think we were pretty good evaluators of one, what products make sense to bring to crypto, like what do users actually need, what is sufficiently complex but also useful. And then also on top of that, actually building like that platform, that protocol that people can use. So I think it's like a mixture, having both of those skill sets is kind of like the sweet spot that we sit in right now.
Yeah, and I think that's definitely notable, and really just wanted to outline that. Another thing I see that you guys recently started doing, which was cool, is weekly market recaps. It almost seems like you guys in general are just looking to bridge over a lot of information that retail traders or people just getting into the space don't necessarily have. In general, I'm curious, what is your guys's general outlook on current crypto, Web3, even traditional markets? I think it's fun while we have you guys up here to just stop on this a little bit, considering the recent volatility we've had.
Yeah, I think a lot of last couple of weeks, just traditional markets been kind of driven by Fed policy, inflation, speed of rate hikes. I think there's like consensus that we're going to have like 3 hikes in 2022 and 8 priced in by the end of 2024. But if the Fed continues to kind of be like hawkish on wage growth, unemployment, and inflation, these expectations as a risk are kind of low. But I think this is like what's driven a lot of the market recently. Just a ton of like macro sentiment coming in. But from our perspective, like the products that we want to build, in the crypto markets too, like the products we want to build are supposed to perform across these market environments. So the suite of vaults, kind of Friktion's native structured products should be, there should be a vault to perform in this environment. Let's say we get like a change in inflation, we have different employment numbers, Fed being pretty hawkish. Like there's so many things that we can do to kind of like tailor risk reward profiles around what could happen, because I think there's like a well-known set of outcomes. Obviously, like the market hasn't liked it. Technology stocks have gotten hammered in the last couple of days too, and finally made a little bit of a bounce yesterday. So I think our market moves a ton, right? Everyone in this market knows volatility is kind of inherent to crypto. So our job is to find ways for users to monetize this through Friktion's vaults. So looking forward to kind of bringing out some vaults that are specifically focused on harvesting volatility yield.
Yeah, definitely exciting there. And I'm just curious, you threw out that the Fed is hawkish. We're kind of staying in this high inflation, or when you're saying rate hikes, does that mean we're actually looking to get out of this high inflation environment a little bit? Just a little clarity there for someone like myself or who may not be keeping up too much with the Fed. Are we keeping sort of the status quota of the past year, maybe year and a half, or is this starting to change a little bit?
I mean, I think it's starting to change a bit. It's tough to say how material the change will be. I think like the transitory inflation meme is it's not as much of a meme as people have started to think, as we've seen in the last couple of weeks. Seen like consumer pricing, any pricing of anything, supply chains, everything. Have started to price some of these things in. But yeah, I think there is an environment at which not a lot of people are prepared for this, and I think markets are like certainly pricing in that uncertainty a little bit more than we've seen recently.
Awesome. So just to get more focused on Friktion, I think it's notable just the fact that you guys are looking to bridge this information and really, I was reading your weekly market recap and I just thought it was really notable in the sense, even all the sources that you guys put in. And it's great seeing that you're really trying to put this information out there, bridging that information asymmetry. But to jump in specifically more to Friktion, I was reading up on you guys, and you guys are really looking to cater to almost 3 different types of users, whether it's a passive investor, an active trader, or a DAO. Do you maybe want to touch on each of these aspects and how you're looking to cater products to them?
Yeah, for sure. I mean, this is where Friktion gets really exciting because the vaults are traditional retail products. So anyone has access to vaults, you can permissionlessly deposit and use the product. But now there's a new tier, I think, of demand in DeFi, and that's coming from DAOs. DAOs, essentially institutions of tomorrow, in which you can manage capital together, you can allocate together, you can run projects together. But traditionally, the focus of DAOs has been product development, and just development and then product, like getting a really good product out there, and that's the focus. And not a lot of DAOs have historically treated their asset base as risk capital. By that, I mean recognizing kind of that they have some responsibility of managing this risk. And then B, they have generally most DAOs don't have the skill set in-house. This is maybe like traditional companies would have a CFO, a comptroller, a treasurer. In this case, DAOs, I mean, they're focused on building and shipping new products, right? So Friktion will be offering through Circuits, a program that we're pretty excited to announce soon, a way in which DAOs can delegate assets and through the Friktion model, to have inductors, which are kind of the balancers and optimizers of vaults, vaults being kind of native products, to have custom vaults or strategies built around the DAO's risk profile. And this would give institutional treasuries, the institutions of tomorrow, the access to deploy capital based off of their tolerances. And the way we think about this is like, is a DAO thinking that they want to have cash for 6 months, 1 year, 2 years? Do they want to survive a bear market? Do they have no plans to do that? And how do they look at their asset base in a way in which they could perform across these markets?
Yeah, I think that makes a lot of sense. And before we get into some of the more traditional vaults, I would just say, or the ones that users would be using, am I mistaken to say you guys have already even started a little bit of this Genesis circuit with Invictus DAO, helping them out to manage their SOL assets better? So in this exact example, it sounds like Invictus DAO is holding on to some SOL, but they're not necessarily sure where the most like productive place to get yield is on it. So you guys have jumped in and they're actually utilizing one of your vaults, correct?
Exactly. Yeah. They we manage about 20% of Invictus DAO's MSOL treasury through Friktion's permissionless vault. And as their treasury looks to kind of scale, and they have a lot of different assets inside, we're hoping to help them out with more. And yeah, it's pretty exciting to have them as an early part of the Genesis circuit, and looking forward to bringing in some more DAOs as well.
Yeah, I definitely think that's exciting. And as we see more DAOs, it just makes sense, especially because a lot of these DAOs are curious. What percentage of crypto assets, risk assets should we be holding? What percent of stables? And for you guys to really come in and have a seamless service, it makes a lot of sense. So it's cool to see you guys are building out these services. To pivot a little bit, I know there might be some people who are still confused. Okay, what is going on with these structured products? What is a covered call? I think that is your most notable vault at the moment. Do you maybe want to jump into the idea of structured products and more specifically what a covered call is?
Yeah. So structured products are just kind of they're any like derivative or kind of like asset that has a payoff that's not like really recreatable by just like normal like spot assets, right? So most people trade things on like Uniswap or a CEX like Binance or FTX, and usually you have like linear instruments that you just like kind of long or short, and then they have those perpetuals and spot you can do that with. Um, but like typically that gives you a very like basic payoff structure, and typically people have like different preferences for what their portfolio should look like and like what kind of risks they should take, right? So as like the long-term vision of Friktion there is to kind of build a customized portfolio, a customized vault for every user. But we're starting with covered calls and protected puts in order to like cash secure puts in order to just bootstrap the protocol. And so covered calls, for example, are just, it's basically you sell this thing called a call option on top of some like underlying asset you have. And typically it's viewed as a way to, essentially like get some yield on top of that asset in exchange for like reducing some upside. So essentially you're like making this trade-off where you're saying, okay, like if the asset goes up a lot, then I'm willing to like lose some of that upside. But if it just doesn't move at all or it goes down, I'm gonna like make this extra yield on top of it every week, or every 2 weeks, so whatever time period you're trading this on. And so you're making this like trade-off, but it could be pretty favorable for a lot of people who maybe are happy to like sell that asset at a certain price and just want to kind of have this like lower volatility position on the asset. And yeah, so like that's kind of like the view of Friktion is like, okay, like let people kind of express the opinion on the market that they want to and take like the risks and upsides and downsides that they kind of like prefer to take.
Yeah, and I think that's really notable in the sense that it is a way to actively generate. It's more thought of as a yield strategy. So I think that's notable for people to think. But even just banking on that bigger point you said, setting up structured products, whatever type of option strategies it would be, we'll just stick to covered calls now. It can be a little bit intimidating and daunting, let alone in traditional markets. But then you take it into crypto. For someone like me or a new user jumping in, they might not necessarily know where a lot of this options flow is coming from, what platforms to be using, how to get exposure to certain assets on options. Like there's probably not that many crypto assets that support really liquid option markets. So going in and kind of jumping through all these different hoops to find these things, I think can be really intimidating. And it sounds like Friktion is in essence trying to reduce the friction of jumping all around and trying to structure these products on your own, learning them, figuring out where the liquidity is, where you can just go to this one D app where it almost is building all of these structured products for you.
Totally. Yeah, I mean, the idea is that, as Alex mentioned, structured products are functionally just designed payoff curves by a team of inductors is kind of how we're going to refer to it going forward. And yeah, these are built to fit what users want, right? I think traditionally DeFi options haven't taken off because it's pretty complicated to get a off-chain market maker, who's generally the source of liquidity, to show tight spreads over kind of deep order books and then over a long period of time, because that gives away a lot of information that they may not want to, and also puts them in risk that they just haven't been comfortable wearing. So it's caused it to be pretty challenging for people to use like order book or OMM based models on Solana so far. So I think what Friktion does essentially says we'll create these concentrated liquidity windows in which market makers, institutional firms, anyone can kind of come in and purchase or take the other side of these trades. So we use Channel RFQ, which is like a Solana native request for quote platform, essentially aggregates liquidity from 8 to 12 market makers at some point in which the window is being held, and that window is when the options are being traded. And we use that window to get a competitive best price for every user within Friktion. So if you're deposited into a vault and your assets are getting deployed, we're using an auctioning process that isn't traditional Telegram chat, which I think it has been kind of the pinnacle for most of these vault type products. So really want to make it so that users can like know, how are you getting best price? Well, okay, well, we have this competitive order book, this implied order book that's been created, and now market makers are competing against each other to get you the best price for the structured product. So yeah.
Yeah, that's really interesting. And when you're mentioning the RFQ, this was actually one of the questions I had. Where are you guys getting most of this liquidity for? I see you're integrated in Psi options, but it also sounds like you guys have market makers that are off chain that are also inside of this quote system, if I'm not mistaken.
Yep. So we have, as I was saying, we have, let's say, 8 to 10 market makers who are participating in the channel RFQ process, which essentially involves a 30 to an hour window in which they're providing concentrated liquidity for each of the assets. So essentially, it's a traditional like blind Dutch auction. You're going through a process by which each asset has some time in which it's being offered. So the takers, which are the vaults, are looking to sell the call versus just using the first vault as example. And then the makers are looking to purchase this. And they're showing prices in which they're willing to buy this for. And then at the end of some window, the best bid gets hit. And that's how, that's how we do it traditionally, because that brings in a ton of market makers.
Awesome.
Yeah.
And I'm curious here, just like trying to think of both sides of the trades here. So you have the market maker, and are these market makers, if the vaults, and I just want to make sure I'm understanding this correctly, if the vaults are selling these call options, are a lot of these market makers willing to buy these call options? Am I understanding that correctly? Just in general, trying to understand the flow of these things. So overall, you guys are trying to find people that are bullish on the ecosystem, and it doesn't seem like you're having too big of a problem with that.
Yeah, I think, again, you mentioned earlier, like kind of why our backgrounds fit into this well. I think another important part is like Alex has done market microstructure stuff. I've been on the other side of market making a ton. Some other folks on the team also quite familiar with just like low level engineering and kind of markets. So a lot of it was like, how can we design and how can we work with the channel team to design this like highly effective auction, which would incentivize market makers to show up and participate. I think a lot of it just like have a seamless UI UX, which we focus on in the main front end as well. And then I think the team is also working on an SDK so market makers can plug directly in for not having to be awake at like 2 a.m. Central or 800 UTC to participate in the auction. So I think this is one of the big ways we scale and end up being able to compete against CeFi, is because we like offer feature parity with a lot of the products. And the FTX API, for example, super popular and very easy to use. So we want to kind of learn from things like that.
Yeah, and that's really exciting. I'm curious, it sounds like there's definitely a lot of difficulties in logistics to make this all happen and coordinate it. What sets you guys apart from, per se, other decentralized products that are trying to offer structured products as well? How are you guys maybe overcoming, or what have some failures you've seen in the past that didn't necessarily work out?
Alex, want to take this one?
It's a good question. Yeah. It's a good question. I would say, I mean, the classic, so I mean, I guess classic examples of when structured products like aren't managed correctly. I would say typically it's an example of like allowing someone to take too much risk when they don't understand it, or like pushing them to take too much risk when they don't understand it, or, you know, like usually it has to do with like getting liquidated or
exercised, yeah,
or getting exercised or getting a bad like fill on some trade, right? And like the user just doesn't know because it's so opaque to them. So that's kind of the bad side of structured product. I would say it's like, that's when people, you know, they'll talk about 2008 and like the recession and be like, oh, structured products were like cause of that. And like you could call like mortgage-backed securities and some of those kind of assets around that structured products, right? But like that, I guess that goes back to what I was saying. Like a big part of this, the thesis for Friktion is like not making things too complex. And I think like when you talk to TradFi people, a lot of times like you know, they'll assume that things just become like sufficiently like ridiculously complex, because that's kind of how structured products have like tended to be like over time in TradFi. But that's just like, I mean, it doesn't have to be the case, and it doesn't really make sense, especially for the average retail user that doesn't really need something that has some crazy curve, crazy payoff, right? You need something very simple. So I think our view is like avoid you know, like large leverage, avoid really high leverage, avoid like composition of like many like complex contracts that's going to give you just like basically give you just bad execution, and just like take the simple building blocks, you know, and make something that's just to make a portfolio basically. So yeah, I mean, so like basically, like I guess there's a few, like, you know, honestly, there's something that happens every few years. I would say, like, there's stuff like in Korea, there's like a lot of people who take leverage on call options and don't really understand what they're doing, and will get exercised and stuff like that. But you know, like I think like one thing that we do to stop that, for example, is like all the call options we sell are like fully collateralized, right? So you can never get liquidated on the option. You can never get, you'll never lose all your money. There's like a fixed downside on it as well. So it's just like basically the way we structure it is to like avoid these kind of pitfalls.
Yeah. And so I guess my next question would be to just break it down to the user. There obviously is risk tied to this. What would you say are the main risks? What happens if you, for example, do get exercised in one of these structured products? What is the downside looking like for someone in a vault?
Yeah,
So you wanna
so
talk about like just what happens when a call rips through the strike.
yeah, exactly. So like we can start with calls.
Awesome.
Usually you go sell a call like 20 to 30% out of the money, which means like the strike price will basically be 20 to 30% like above what the current spot price is for that asset. And yeah, so like if the price doesn't move at all, if the price if the option expires when the price is below the strike, you're essentially just gonna have made that yield, like whatever you sold the call option for, we're gonna convert that to the underlying asset, and you've earned that.
Premium. Yeah.
And if it does get exercised, then essentially we're going to deliver the asset right at that price. Let's say like your soul's like 150, and then it goes and you sell a call option at 175, and then the soul goes to 200. Essentially, we'd be forced to sell the soul that is deposited for 175, right? And then the vault would just buy it back at that higher price. So which means like the amount of soul notional you would have would decrease by some percentage, but like the actual like USD, so you like in the P&L you realize like the return you realize in like in US dollars would still be positive, right? So essentially you're like trading off. But the thing is like you make less than you would have if you had just held Sol like Delta 1 position, if you just held Sol spot, right? So basically you're making this trade-off where like you kind of earn this yield if the asset doesn't go above the strike price, and you keep like the full of the returns of holding spot. But if it goes above, you're going to like lose some of that upside. That's kind of the trade-off.
Okay, so that makes sense because you're still holding the underlying soul. You're not just selling this option. You're still holding the underlying soul. You still get some of the upside. You just have to exercise some of that option, which you lose some of the upside you had. But you still collect the premium. And that's what it sounds like people are really after. And maybe we can just segue here for a second. And the upside that these structured products offer, you're getting this premium, this yield. It's a lot more organic than maybe the traditional really high inflation governance token setup you guys see. Do you maybe want to touch on why this yield can be a bit in a sense more sustainable?
Yeah, for sure. I mean, there's a couple of sources of yield traditionally in DeFi, right? One of them you mentioned is you provide liquidity into a concert product AMM or just some AMM, and put into tokens, and you receive some set of fees for all transactions within that pool. You receive, and then you can also receive emissions from the native token of that protocol. Now there's sources, lending and borrowing. And most people's time tend to be just dominated with this. And now with the rise of kind of structured products and derivatives, you've seen people be able to sell risk premiums, which functions what you're doing with this option, to collect some return. The key part here is that the return coming from Friktion is due to market conditions, right? If implied vols rise and calls ton to the upside, and Friktion vaults are selling this, it's going to make more money than if implied vols were low on the upside for calls, right? And the exciting part here is that our yields, like I said, are driven by the market, and they're driven by kind of the inherent risk properties of the asset, in this case, an option, right? And by no means are we limited to necessarily just options. I think like there's the perps in DeFi are quite an exciting innovation. Like, it was really exciting to see that happen in 2016, and now there's a ton of work to be done. But our first vaults are just focused on kind of income enhancement with volatility. So, I mean, I think that's one really easy way to think about it. And then we also do a deep dive into our documentation at docs.friction.fi for anyone who's interested, which also has a really good example diving into what Alex was talking about with the call payoff at the various scenarios. So would encourage people to check that out too.
Yeah, that's awesome. And then we haven't touched too much. I believe the other product you offer is cash secured puts. can you maybe just touch on the difference between these two products? Maybe why someone would want to choose 1 volt, volt 1 over volt 2?
Yeah, one big thing, like the most noticeable difference is probably the asset you can earn yield on. So like one thing you could deposit, like you deposit the underlying asset for covered calls. For protected puts, you would deposit USDC or a stable coin, and then essentially like choose the asset on which you sell the protected put, but it would always use USDC, right? In terms of like the view you're expressing on the market, like the payoff you're looking at, the puts would be considered to be more like moderately like bearish on the asset. But it's essentially like you have you're essentially saying, I'd be happy to buy this asset at like a lower price or some price below the strike price, right? So it's kind of a way to like almost earn a yield, but at the same time have this like limit buy in a way on the underlying asset at that price. And it's a little bit more different than that, but that's like a really good way to think about it. Typically, is like, so you'll be happy to receive that asset, like assuming the put options get exercised.
Yeah, awesome. And that's really the two main volts you guys offer currently. Was it tricky figuring out what assets, more specifically for the covered calls, was it tricky figuring out what assets you guys were able to find ample liquidity for, ample market makers? What is sort of the process of figuring out if you guys can support an asset or not?
Yeah, that's a really good question. We spend a lot of time thinking about pre-asset support. Because there's a couple of things that are needed. You mentioned one really good one, which is just liquidity. Like how much volume do you think can be done without having a significant price impact? So when we do that, we tend to look at we look at the perps, we look at the spot 24-hour volumes, and then we try to calculate using simple models like what does historical implied vol look like for all these assets, and how much does that fluctuate? Because I think that's going to drive market makers' appetites to participate in this product. And generally for most off-chain market makers, it can take anywhere from like 1 to 4 weeks for them to create what's just called like a volatility surface, which represents the kind of the risk of that asset and the options that we're deciding to potentially sell. So there's a decent amount of screening that has to go into deciding to list an asset. Another one is it's just Solana specific, is like how much of this asset exists natively in Solana. For example, wrapped Luna. Not a ton of it, but there's a lot more coming over time. And then same with things like UST, which is the native stablecoin for Terra. So really working on like growing adoption for these. And it makes it fun because we work with our cross-chain partners in these protocols and other L1s to see if we can incentivize bringing more of that over. Same for staking derivatives. Solana has been naturally really competitive for staking derivatives, and we're working with Marinade, Socian, and soon to be a couple other teams in this realm. But as these underlying pools get more liquidity in their swap, for example, from SCN Sol to Sol, we'll be able to do a lot more volume and offer a larger size on the volts.
Yeah, so I guess that's another thing to outline. These volts, they can and they tend to fill up because you guys can only offer so much there's only so much liquidity. So not everyone can really jump into the same volt because there may not necessarily be that option buyer on the other end of it. So I think that's notable for some people that might be like, wait, why is this filled up? My traditional yield farms have never filled up before. Another thing that I think might throw people off a little bit, but I was reading up and it seems to make sense. It gets a little technical. Is can you guys outline the reasoning behind the Epochs system? It sounds like it's more so of just ensuring there's time for quotes to come through, that people aren't gaming the system in essence. But do you maybe want to just outline that a bit more?
Yeah, so epochs are kind of week-long periods in which Friktion's vaults are deployed. So we also do a deep dive kind of into how epochs work on the docs as well, so definitely check that out. Our epochs start and end on Friday, kind of morning UTC. Essentially, at the start of an epoch, a strategy is deployed, meaning everyone is deposited up until the beginning of that time. And then at that time, the option in the case of the first 2 volts are minted and sold. And now that's the auction process. And now the position is active. So that position is expiring in 1 week at the end of the epoch. So essentially, you can think about an epoch as like how long your strategy lasts for. This is a little bit confusing for most people because traditional yield farming in like AMMs, you just provide liquidity until like you see the price of the token go down so much or your impermanent loss is so high that you have to just get out. So one normal thing to think about, you mentioned earlier, is like if you look at Friktion versus traditional like a native token incentive yield farming on AMMs, we like the capacity constraints on Friktion are market based, the same way that the capacity constraints on the APYs on providing liquidity into AMMs are, in the sense that the more liquidity is provided into an AMM, the lower the implied yield for anyone at the same size is, if that makes sense. So if there's a $1 million pool and you're 10% of it, and suddenly the pool goes to 100 million, you shouldn't be expecting the same rewards from LP tokens in traditional like AMMs.
Yeah, gotcha. That makes a lot of sense here. And just in general, I know you guys are trying to keep these processes as simple as possible, but it sounds like there's inherently a lot of things looped in. Coming from a non-developer, how do you guys look to ensure smart contract security? Are these complex smart contracts, or is a lot of this being done sort of through this RFQ off-chain? I'm curious what the process here is for setting up these smart contracts for the vaults.
Good question. Yeah. So currently getting like an audit done from a couple of places is one big thing, just to put that out there. But other than that, so the smart contracts, so yeah, the RFQ is done like on chain, as in like all the executions on chain, right? It's not agreed on before like off chain at all. Like it's just like there's like a quoting system, market makers will come on.
That's really important to emphasize, as Alex is saying, is like it's having on chain RFQ systems is like, it ensures that we're competitive and we can't just have like someone messaging on Telegram to try to get a more competitive bid. So,
okay.
Yeah, exactly. So they have to actually post the collateral in order to like make a bid for the set of options we're selling for a certain vault. So that's really important to keep in mind. And then in terms of, but yeah, the smart contracts are fairly complex. Like there's like a state machine and you have to roll it in different ways. And there is opportunity to like have error in that. So before these audits are done, we've actually permissioned all the instructions that have like sensitive like aspects in terms of execution for the vault. So deposit, withdraw, and those like client facing instructions, of course, anyone can run. But the like rebalancing instructions for the vault, for each vault, are currently have like a public key that's like assigned to run those. And so that's pretty important for now to prevent like anything, just to kind of like avoid any problems with the smart contracts, and keep it very safe. But I think the goal there is to move it to like completely permissionless in the future, like after audits are done. And it's definitely like on the roadmap.
Yeah, it's definitely just important to hear. Like this is a general question I like to ask specifically, but that you guys are thinking about. Like it almost sounds silly, but it needs to be thought about. Like, okay, what are the steps here? What's the most optimal thing to do while we wait for these audits to come through? How do we stay proactive versus reactive? And it sounds like you guys definitely have that in mind. Like you're willing to recognize, look, these are fairly complex smart contracts. They can be sensitive and we need to spend our time on them. So I think that's important to know. And even just for users in general, like I think a lot of people just stumble into crypto, and one, they either get scared away by this idea of smart contract risk, or they don't understand it. And I think it's just important to understand the risk you're entering into in general. To open it up, I mean, I'm starting to get closer down to the bottom of my questions, but I'm curious, like what is coming up on your guys' roadmap that you're specifically excited for? I know you mentioned circuits. What other structured products do you think would be fun or not even like, with your guys' view on the market, what ones would be beneficial to current market conditions, or what you guys are looking forward to?
Yeah, good question. So as we kind of mentioned earlier, one of the biggest things that I think DeFi still has to unlock is just volatility as an asset class within like this. And it's kind of interesting because like DeFi right now has a ton of like D and not a lot of the Fi. So what volatility would unlock is basically like strategies that have low correlation. So functionally, most strategies in DeFi tend to have really high correlation to larger indices and just larger like assets. So yeah, one big thing is just unlocking vol as an asset class within crypto. And maybe it's on top of crypto, within crypto, debatable whether it's actually an asset class. But I think this unlocks the ability for people to make money while the price of an asset isn't just moving up or down. So they're kind of making bets on rates of changes, or they're making bets on just forward implied volatility, realized volatility. And this creates a really wholesome portfolio because now you can hedge some of your exposure that it's pretty obvious from doing some portfolio analysis that a lot of DAOs or individuals are wearing. SOL goes up $1, their portfolio goes up $2, but SOL goes down $1 and their portfolio goes down $4. So I think like these type of instruments, volatility-based instruments, will be really useful in providing hedges for this, and kind of want to be as transparent as we can in the process, as we've done so far as we do this.
Yeah, that's definitely exciting. And as I start to wrap things up, another fun thing to ask is, what has been inherently tricky, something you guys are trying to tackle? What have been some of the challenges of taking on this feat of making structured products on a blockchain?
Yeah, it's a good question. I think number one was just like figuring out, like learning Solana dev. Like, so I wasn't really a Solana dev before this. It's obviously like a lot of domain specific kind of knowledge you need. Like that for sure. You got to figure, you got to know how to like map like some like business logic to like an instruction set, because it's like computational constraints on Solana as well. But other than that, it's relatively straightforward like software development. And yeah, there is the aspect of like working in a decentralized like database, essentially, and computational system. But I think things mostly aren't too bad. And yeah, I think the main constraint I think was figuring out how do we get these products out there in like an educational way. I think that was the thing we wanted to tackle the most, was like how do we like educate people and like don't confuse people and get people excited about the product and like attraction that way. I think that was like our biggest kind of barrier.
Yeah, I definitely agree that that's incredibly important, because people stumble across these things and it's like, what really is going on behind the doors? If you're coming from somewhere retail trading and maybe all the knowledge is like, I just degen buy call options on Robinhood, it might be a little bit difficult to really understand the structured products coming from this retail aspect. And it looks like you guys are definitely taking focus on that. I mean, the docs were amazing. I was diving into those and just having a great time learning in general. You guys even just have general outlines on option markets. So I encourage everyone to jump over and just check out your guys's Medium, your docs as well. Even that market recap, I keep referring back to it, but I think it's just notable that you guys are trying to bridge a lot of this information asymmetry. And it really follows suit with sort of the entire onus of Web3 and DeFi. So I guess to wrap this up, my last question here is, why Solana? Like you mentioned, it was a little bit harder to just get over that first hump, but it definitely seems like the positives are starting to outweigh that small learning curve in the beginning. What really made Solana your guys's target?
Yeah, I guess I can speak to like more of the like why we chose it from the beginning and the community stuff, and then obviously there's like a ton of benefits with Serum. Serum's like super powerful.
Okay, yeah.
So I think the big thing in the beginning was there's not a lot of tooling, but we had a lot of friends. So one of the people that initially got me into crypto was Ian, who's the founder of Saber, Ian and Dylan, and Michael. And they were just like, they were building on Solana for a while. They started quite early in the first hackathon, and we'd been talking about stuff for a while, for a lot of projects that they were working on, and then started to see like the whole Solana ecosystem was developing pretty maturely, and it was starting to attract like traditional financial institutions, which is something that I didn't see other chains doing a really good job of, because this is kind of something that like you can get a bad reputation, but like at the end of the day, if you don't bring those financial services to your chain, and Pyth is another good example. We have probably like 50 of the best market making HFT firms in the world connected in the Pyth network. And I think Solana shows it's a good example of this. And it's a ton of sophistication coming in. Dev tooling is getting better, and Serum.
Yeah, that's amazing just to hear. That was really what I was setting up that question to touch on. It's incredibly notable seeing the existing talent flood into the space, and that you guys are looking to address this and build products based on the tooling around you, and that it's well connected. That really wraps it up, and that just makes me excited in general on Solana, seeing things like Pyth and all of these very well regarded market makers and venture capitalists really dive headfirst into the ecosystem and provide support is really exciting overall. Like a lot of people like to meme that the VCs are going to dump on you all of this stuff, but it really brings a lot of ethos and talent into the ecosystem, which I think is exciting. So in general, that wraps it up for me. I'm curious, do you guys have anything you want to close off with? I really enjoyed our discussion. I definitely learned a handful of things between researching all of you guys' docs and mediums and being on here today. It's definitely great being able to talk to you guys, and I hope the viewers took away something as well. Do you guys have anything you want to close this off with, Uddhav and Alex?
Yeah, I think thanks for having us, man. I really appreciate it. And anyone with any questions about what we talked about or looking to get more involved, Friktion deploys a task force-based model. Functionally, a lot of our contributors come from the Discord. So we have a task force on quantitative research and analytics, one on education, and one on user research. So if you think any of those are interesting and you'd love to dive in, I mean, a lot of our content on Medium. So our Medium is friktionlabs.medium.com. A lot of our content there is coming entirely from the contributors. And as we get our task force grants program set up, we'll have a more formalized way for people to participate in network ownership through the task forces. And anyone who really likes to do research, we have some pretty quantitative degens inside that task force, and always working on improving the UX and being as transparent as we can. I think that's something that Friktion users should notice. Is just like, we give you as much information as we can. As soon as the auctions are finished and as soon as pricing is live, we try to be transparent about it, and I'm pretty clear to the users. And yeah, really excited to continue to be building on Solana and bring Solana DeFi kind of to the forefront.
Yeah, and just to wrap it up here, I definitely don't think that should be understated, but I don't think we touched maybe enough here on what you guys are building with the DAO, but these grants and the task force you guys are doing really embodies back to that idea of DeFi and Web3. Something that you mentioned earlier on was we have a lot of D, maybe not Fi. I think there's even a lot of this aspect where how much of these D apps are really decentralized. So hearing that you guys are looking to build up all of these more user created, user owned, this whole onus of decentralization or Web3, and looking to build that out, there obviously is this beginning stages where you guys have to contribute a lot, but get it off the ground. But hearing that you guys are looking and starting to build these avenues to shift it over towards more of the community and the users and whoever really wants to get involved is exciting. So I think we can wrap that there. I really appreciate you guys, Alex and Uddhav, for joining. And I'm sure we'll speak to you guys soon. I mean, over at Solana News, we're keeping an eye on what you guys are building. So I'm expecting a lot more in the future. It sounds like those circuits are going to be exciting as well. And yeah, I just want to thank you guys for coming on.
Thanks for having us, Greg. Appreciate it.
Yeah, thanks, man. Appreciate it.
Peace out, guys. Awesome. So that was an amazing live stream there. We had Uddhav and Alex from Friktion Labs. They joined us. And I won't ramble for too much here, as we just had that 45-minute discussion. But it was amazing overall to just hear what they're building, why they chose Solana, what's important about their products, the benefits it adds. And overall, I'm just excited to watch Friktion continue building. And I like the onus they are trying to push towards decentralization in Web3. For everyone who enjoyed that content, please go ahead and subscribe, like the video. There's going to be a ton more content coming out in general. So I'll leave it at that, and peace out till next time, everyone.